Pennsylvania citizens borrow money every day in different ways for different reasons. Borrowing can take many forms: using a credit card, getting a loan from a bank or a credit union, using a buy here, pay here option, or going to a company that offers consumer or mortgage loans. Every time you borrow money, you pay what is called interest. Interest is the amount of money the lender makes for lending you the money. In Pennsylvania, interest rates on some, but not all lending is regulated by law. Finding out how much interest you will be charged depends on who is lending you the money, what you are purchasing, and whether or not you are a member of the military. Remember, if you aren't satisfied, shop around to find the best option for you and your family. First, we're going to discuss personal loans. If you go to a bank for a loan, there is no cap on the maximum amount of interest or fees they can charge you. If you are a member of a credit union seeking a personal loan, you can be charged no more than an 18% interest rate annually. A consumer discount company offers loans for a variety of purposes, but must be licensed by the Department of Banking and Securities to offer loans to Pennsylvania residents. They can offer you loans in two ways. First, they may calculate finance and service charges on a case-by-case basis. Or second, they may charge 24% simple interest. Unfortunately, some Pennsylvania residents take out loans from unlicensed companies operating outside Pennsylvania or even outside the United States. Frequently, the interest rate they charge far exceeds the original loan. Even if they are unlicensed, these lenders are still bound by Pennsylvania law, which limits the amount of interest you can be charged to 6% annually. This is true even if the lender is not located in Pennsylvania. Some people needing cash will take their own property, such as a watch, and go to a pawnbroker to borrow money using their property as collateral. If you pay back the loan on time, you get your property back. A pawnbroker will charge you interest on the loan, 36% per year plus a $1 fee. If you are a member of the military, your borrowing and lending is regulated under federal law by the Military Lending Act. Loans to service members are capped at 36% annual interest. If you are interested in a loan for your business, this is not considered a consumer loan. Business loans do not have the same protections as traditional consumer loans and do not have maximum interest rates. Now let's move on to car and retail loans. If you purchase a car at an auto dealer and finance through them, your interest will depend on the age of the vehicle you are purchasing. If you are purchasing a car 2 years old or newer, you can be charged up to 18% interest annually. If you are purchasing a used car that is older than 2 years, you can be charged up to 21% interest annually. What if you want to buy an item like a refrigerator or a piece of furniture like a bed? You may decide to finance your own purchase on installment from the store selling you the item. In that case, there is no cap on the maximum amount of interest or fees they can charge. If you are using a credit card to buy that refrigerator or bed, there is also no cap on the maximum amount of interest or fees they can charge you. Next, we're going to discuss mortgages. If you are buying a home, banks and mortgage lenders have no limits on the amount of interest or fees they can charge. Your credit history or credit score could affect the interest rate you will be charged. However, the competition between banks and mortgage lenders tend to create market-based limits that satisfy home buyers. Some people like to finance purchases using the equity in their homes by getting a secondary mortgage or a home equity line of credit. Banks have no interest rate and fee caps, but on a secondary mortgage loan, other licensed mortgage lenders can charge up to 22.5% interest and a 3% upfront fee. A person who is not licensed as a mortgage lender nor in the mortgage business can make up to 3 residential mortgage loans a year, but the interest rates and fees which they can charge are capped by law. When borrowing money, you should be aware that you could face additional charges that do not fall under the categories of interest or typical fees, but which are allowed under law. These could include fees that will ensure that the lender is repaid even if you become disabled, unemployed, or deceased. Additional lending costs may be required by such as homeowners insurance or car insurance and are designed to preserve the value of the item you borrowed money to purchase. Failure to make payments on time can result in additional fees. It is important to pay attention to the fine print in your loan agreement to ensure you understand all of the fees that you could be charged. As you have seen, borrowing money can be complex, and consumers have many options from which to choose. Remember, if you aren't satisfied, shop around to find the best option for you and your family. Do you have questions about interest rates? Call us at 1-800-PA-BANKS. Though the Department of Banking and Securities cannot recommend products or lenders, our trained consumer service staff can answer your questions and help you think through the issues you face when considering a loan. This video is for education purposes only and should not be considered legal advice.